Good morning, good afternoon, everybody, wherever you are in the world. Give a few minutes for people to stream in here. Just going live. Good morning, everybody. Afternoon. Probably have some European listeners today, so good afternoon, guys. We do have a great guest, Enya Denkt. He is on the show, European based, so he's coming in later in the day to talk with us. He is the founder of the Bitcoin Treasury community here on X, so we're going to pick his brain about stuff. Good morning, afternoon. See Enya. All right. As we let a few more people stream in, I'm going to do an intro. So my name is Ansel Lindner. This is BitcoinTreasuries.net Spaces. Check out BitcoinTreasuries.net. We track 310 plus companies and holders, entities. That includes public companies, private companies, ETFs, governments, even wrapped Bitcoin, that kind of stuff. You can get all those metrics that we have with a free account. So check out BitcoinTreasuries.net. Also, really excited about the Bitcoin Treasury Masterclass that we have coming up at the end of the month. This is with expert Charlene Federico. She is an ex-US regulator and best-selling author. In 90 minutes, here's what you're going to get: strategic frameworks for using Bitcoin and Bitcoin as a treasury asset, deep dive case study into MicroStrategy, security, tax, and risk best practices, step-by-step deployment roadmap if you want to do this in your own company, and a live Q&A. So this is perfect for those business owners, CFOs, corporate treasurers, VPs, compliance officers, board members, everything. So this class is coming up on September 30th. So time is kind of running out and spaces are limited. So check out BitcoinTreasuryCourse.com, BitcoinTreasuryCourse.com, and use the code Bitcoin Treasuries for 15% discount off your course price. All right. With that out of the way, we have Enya. Enya is, like I said, the founder of the Bitcoin Treasuries X community. He is based out of Europe, and so he's going to have good insights on what's going on in the European scene. But let's bring him up. Enya, how are you doing today?
I'm great. Thank you for having me. How are you?
I'm really good. Am I coming in loud enough? I've gotten some feedback here that I am not very loud.
I can hear you well. I think I can hear you well. So I guess also the others. If not, please raise your hand.
Okay.
Can you hear me well?
Yes, sir. You're coming in loud and clear, loud and clear. Perfect. All right. I'll try to be a little bit closer to the mic. So the guys over in my community, they don't give me a hard time. But okay. So I've been through a couple of your tweets here in the last few weeks. And one of the ideas that I keep running across is this Bitcoin Treasury Summer. I've kind of called it a Treasury season, like an altcoin season. And now we have a Treasury season. So tell me what your thoughts are behind this Bitcoin Treasury Summer.
Yeah, absolutely. So, I mean, we have seen in just 5 months, I would say an equivalent of a full bull market and a bear market. So definitely this summer has been really rough and really tough for all of us invested in Bitcoin treasury companies. The price simply was not aligned anymore to the action of these companies and to the valuations. And of course, this mixes up with there are a lot of factors driving these, and also opinions are driven by the price / driving the price. There is some sort of reflexivity for sure. It's hard to point out actually what has caused that. We have seen some patterns. For example, when we look at the Bitcoin dominance, when it started to drop and altcoins like Ethereum started to pick up the price, then we saw a lot of liquidity exiting the Bitcoin treasuries. And here we could assume, of course, that's speculation, but makes correlation is quite visual and would explain it, that a lot of money, I would say really short-term oriented, rotated into altcoins. This was also mixed with, for sure, short shorting funds, hedge funds that were shorting. Personally, I did some quite in-depth analysis on Capital B, for example, and we saw the short funds being very active and building up their positions. We know also Metaplanet, that was the same. And I think it's quite obvious that all these companies are moving together, and we can see that. It was not clear before, actually it was not happening before. They moved together up and then they started to move together down. And I see, when I look at the charts, I see some very interesting patterns, right? I see Bitcoin that is not necessarily correlated short-term with these companies, or it hasn't been in the past few months, unless when it rallies really hard. And somehow strategy being much more correlated to Bitcoin than, for example, these smaller companies. And my personal belief, and it's a belief, so happy to be challenged on that, is actually that these companies are much smaller plays. So liquidity, moving in liquidity and moving out liquidity moves a lot the price. And there are different plays themselves than MSTR, for example. And there is a lot of money that seeks short-term profits, short-term edges. Instead, I would say we washed out a lot of that from MSTR by now. And by now, I would say also from these companies, it seems after the price dropped like even 70%, now it seems to have found a ground and reverted, at least looking at the data from the past few days. We need to see how it evolves. But to close this is what we see in the price. But I would invite everybody to make their own conclusion and ask themselves why they are invested in first place in these companies. What is their investment case? My personal investment case in these companies is the value that is behind. So the price is just a number, and that sometimes can be more expensive or cheaper. And if you are lucky enough or prepared enough, you can actually use that and have much better entry opportunity. But the short-term horizon for me doesn't work. So I try to price more the actions of these companies, which is the stacking of Bitcoin rather than the price. And if I look at the picture, I see a very good picture. These companies, a few companies, I mean, many companies that, thanks to your website, we can track them. We arrived to 180 public companies worldwide. By now, I think we doubled kind of in a few months. But few companies are really building for scalability. And these few companies are stacking fast. They are being very selective about the type of deals they get. They are building a balance sheet that is anti-fragile, so that it will not break when we meet, if we slow down with Bitcoin price. It will not break if things go south for some time. And that's why I feel the horizon must be long. Otherwise, the pain can be very big. That's how I see it.
Yeah, that's very interesting. I was thinking there. So you're saying that the liquidity is low on some of these smaller companies, and so if they're very short-term oriented and they're taking out from the treasury company stock, putting it into altcoins and trying to degen long into the altcoins and back and forth, that makes a lot of sense. Do you see, how does the jurisdictional arbitrage play in there? Because we do have some of these European companies coming up, and I'm sure European investors are more into that market. But on the flip side, all of the altcoins and Bitcoin, those are global, right? And so how do you see that playing?
Yeah, I think you mentioned a very good point. Before moving into talking about, for example, the European market, which I think deserves some attention, and I have some thoughts to share. I would be happy to. I would like to offer, before answering your question, kind of a transition in between comment, let's say, because indeed we have potentially a lot of money that rotated to altcoins, and I want to bring the attention on what type of investment a Bitcoin treasury company is in comparison to Bitcoin, and what opportunities it offers to the retail investor. And all of this is non-financial advice, of course. It's just education. Please feel free to make up your mind. But I think it's very key to see that a Bitcoiner and a Bitcoiner who decided to deep dive into Bitcoin Treasury activity is going to see something different. It's going to look at these companies differently from an altcoiner or a Bitcoin maxi who maybe didn't look up yet or into these companies. And why I'm saying this, because I feel so this determines the way you treat this company, this determines the horizon, this determines the entry price, a good entry price, this determines the way you relate to them and what you compare them to. For example, personally, I don't compare them to altcoin. I mean, I don't trade altcoin, I don't buy altcoin, I don't see these companies as like a substitute of altcoin, but clearly there is a market part, the amount of shareholders or investors that see them as a substitute for altcoins, for example. Said that, all this comes to your investment thesis. And I think Bitcoin treasury companies, I mean, once you look at Bitcoin, and if you, like me, see it as the biggest arbitrage of the century, then you understand that you have options as a retail investor. You could either buy Bitcoin, or you can either sell something, whatever, a service, having your job, and buy Bitcoin with that money that you earn. You can also create a vehicle that has privileged access to debt and buy Bitcoin, or make debt yourself. But of course, creating a vehicle with privileged access to debt, which is a company, maybe a public company which has even bigger access to better conditions, this puts you in a whole other league. All of a sudden, you have much more optionality. And I need to say, who has even more optionality is the retail investor who can buy this company and has the flexibility and the independency in managing the risk, so deciding which company to allocate to, flexibility of pulling out the capital if they feel they expose themselves too much. Also no bureaucracy, and above all, no communication and no shareholder management, not of all what comes, of course, with running a public company. That's why I feel like if you see the Bitcoin treasury public companies as an instrument, an option, a leverage option on Bitcoin, then you start seeing them very different than, I don't know, a short-term trader who continuously looks at MNAV and so on. You start seeing them, you start judging maybe the operations of this company, how quickly and how accretively they acquire Bitcoin. And by looking at that, you can project a bit long-term value once Bitcoin appreciating price. Yeah, just wanted to specify this because I think it's a lot of people, of course, struggled during the summer, myself as well. Like, I think it was really impossible or very hard to foresee more than a 30%, 40% drop. I mean, myself, I bought all the way up and all the way down. And when it was at minus 40%, I felt like, okay, now it's a significant drawdown. It's fine after a big euphoria, but it kept going down, right? And clearly this is because there are different players in the market that are shaking these companies. But once again, personally, risk management, and also looking at the actions of these companies, gives me quite some peace of mind, and long-term horizon keeps me invested. And I see them as a great opportunity at the moment. I would like also to answer your question.
Yeah, that was deep, man. Thanks for going through that. Very good insights there. Yeah. What about the liquidity and trapped in jurisdictions versus the global altcoins?
Yeah, absolutely. So first of all, companies, I mean, public companies per se, first of all, they have a jurisdiction, right? So the main comparison, in my opinion, that comes is, of course, US, Japan, and Europe at the moment, because that's where, of course, US, there is MSTR. On one side, we have these treasuries that are acquiring globally available currencies, right? Somebody could say crypto, but I mean, we're talking about mainly Bitcoin, but every crypto is competing. But I would say that from my point of view, as a Bitcoin treasury investor, personally, I don't don't even think about allocating elsewhere. But yeah, to make a point on your question, like these crypto or tokens, whatever currencies are available everywhere, like altcoins or crypto is available everywhere, and Bitcoin is available everywhere. While public companies are subject to a jurisdiction, and also more than a jurisdiction, I feel the place where they operate is quite location specific and has maybe some privileges, some advantages, or some limitations, right? So first of all, the first distinction is, in my opinion, a Bitcoin a treasury per se, but also a Bitcoin treasury is not competing. I mean, it's a different play. It's a leverage play, so it's a different play in comparison to the asset per se. So it's leverage on the asset, and I would like to give a number because I just looked it up and it's quite interesting and just tells it all, in my opinion. So I during some time ago I did this presentation. I created this slide and I looked at the CAGR, the analyzed growth rate of the compound analyzed growth rate of gold, Bitcoin, the Standard & Poor, and Max 7. And you can see that in the last 10 years, Bitcoin had a CAGR of 74%. 74%. The closest that there was in this list that I just mentioned was NVIDIA with 67%. All the other mags, among the Mag 7, were below 40, mostly actually around 20%. Gold was around 12%, Standard & Poor around 12%. Now, if you take an asset like this, so this is enough for, I mean, changing life. It's a life-changing investment, let's say. It's an asset that is growing at very high speed, of course, 74% is a MET as a statistic. And it's not a portfolio of quantitative investment. It's one pure asset play like gold. And that has a lot of value because it's simple. And this asset that is growing 74% with a CAGR of 74% over the last 10 years, if you now take a company that has access to advantageous conditions for debt or pool of capital and starts to use leverage to acquire it, you have much more than that. You can leverage money, existing fiat money, to acquire a scarce asset that grows at 74% per year. So this is a very different play. It is different on the upside, it is different on the downside. And I saw on X recently this graph that was looking at the monthly performance of MSTR versus Bitcoin. Most of the times they moved together, so up or down. But of course the extent is different because it's leverage. It's like an option, right? It's constant leverage, and the leverage changes over time and so on. But it's a different game. So I think for people who understand it, of course, Bitcoin treasury companies could be let's say they compete for the same pool of capital that would go in Bitcoin, but they're very different games with different risks. Now, said that, after we split the competition between, like, I would say, the pure asset and the public company, then public companies have what you've said, like jurisdiction. They are located, they have location dependency. So once you move from the asset that is a pure asset and available globally, you are starting to take risks. And the risks you take are company risks, location risks, industry risks if the companies are operational risks if the companies are running operations other than acquiring Bitcoin. And the main comparison that I feel like we should focus on, of course, is Europe versus US or even Japan. But Japan has mainly Metaplanet. I wouldn't yet, and I'm not an expert of Japan. I'm invested in Metaplanet, and I really like what they're doing. It's quite exceptional. But I would say, and we can compare Europe versus Japan and US. Europe is quite different. Mainly, I mean, we know it for those of us living in Europe, like every country speaks a different language. And I would invite you building a business in one of these countries and trying to scale it at European level. The type of effort and expenses and costs that it's gonna you need to face, it has a multiplier, right? You don't have one language. You don't have one set of bureaucratic rules. You don't have one registration you need to file. You don't have one VAT. Actually, VAT, whether it's a bit different, but you don't have one system you need to comply with. So it costs. And at the same time, there is asymmetric information about what needs to be done to succeed, right? So imagine this way: you are a company, public company, maybe you buy Bitcoin, and you want to, you're born in your country, and you start. I mean, there is new regulation, so you need to know it, and the regulation changes from country to country. So if you got country specific, maybe you have some advantages that you wouldn't have somewhere else, but also you might have some limitations. And there are quite some advantages that I think people from US are not aware of. For example, some advantages I can think of related to the best, I would say, the best Bitcoin treasury companies that we see now in Europe, on the European land. They are, for example, in UK, for the Smarter Web company. UK is not part of Europe, but territorially, let's say, geographically, we can call it European. In UK, there is no spot ETF. In UK, in 2021, and please correct me if I'm wrong if anybody is from UK, but they banned ETNs, so notes that are redeemable, basically very similar to ETFs, but just there is no spot exposure. So essentially, if you want to own Bitcoin, you need to go to the exchanges. But I heard many times from people living in UK that actually the banks per se are quite averse to facilitate this. So if you transfer money to exchanges, oftentimes you might get a call from your bank asking information. So they make it really hard. And this is quite a competitive advantage for example, the Smarter Web company. Because in a country where with not such exposure, then that characterizes quite of a frictionless way to get exposure to Bitcoin. We know this is going to change. There's going to be some ETF, if I'm not wrong, soon from BlackRock. I read it, to be confirmed. Don't take my word. I think it's going to be in the coming months. I remember reading it next. Nevertheless, this Smarter Web company has still a critical role, and it would be the MSTR of UK. And if we move to another country like France, where we have, for example, Capital B, which is doing extremely great work as well, we have specificities that are only related to France. For example, we have the PEA. The French, basically it's a French tax advantaged account. Once again, if there is any French resident, you feel free to jump in and correct me, raise your hand. But what I learned is that you can own equities that if you hold for more than 5 years, then capital gains on such equities will be tax-free. And this is a no-brainer. And you cannot own ETFs there. So
Wow.
This works. Yeah. So once again, if you're a French resident and said something wrong, correct it. But I researched it before this call just to have it in mind, and I read this and on ChatGPT, basically, the easy way, because I remember this was one of the key points, for example, that drove a lot of capital into Capital B during the past months. This clearly is a competitive advantage. If we look at Germany. This is more for individuals, for example. But once again, the regulation changes. Individuals in Germany, for example, they can buy Bitcoin, and the regulators consider it like gold, so a commodity asset. So if you hold it for more than 1 year, it's tax-free. It's capital gain tax-free. So why I'm saying all of this? First of all, because these are specificities that are belonging to Europe. Every country has its own set of rules, has its own intelligent, educated ways to navigate those rules and develop a business that optimizes in that context. And it's going to be incredibly hard because of language barrier, costs of doing things in a country you don't know and navigate the complexity in the country you don't know, it's going to be incredibly harder for anybody else from us to do that. And I remind you that Europe has most of the G7 countries like belong to Europe. Like we have like biggest GDP countries: Germany, Italy, France, and so on.
Quick question.
Yeah.
So our investors with the EU regulations, an investor in Italy, say, they can invest in listed companies, say in Sweden or in Germany, right?
Yeah, that's totally true. For example,
Okay.
yeah, you can invest all around Europe. There is no limitation, so these companies are equally available. But I need to say there is also, I mean, this is a broader topic, but we have tickers also for, of course, US companies. So you don't, like, if you want, for example, to purchase MSTR, you can purchase EU ticker of MSTR. You don't necessarily need to purchase the Nasdaq ticker, right? So yeah, so it's freely, capital can flow quite freely around equities across Europe, but also US and Japan. Yes. So I would see, and I know that most European investors don't only buy, I don't know, their country Bitcoin treasury company, but they are allocated to MSTR, Metaplanet, and so on. But maybe they know better the peculiarities and the strength and risks of their country company. Like it could be for French investors, Capital B, for example, this PEA, this French tax advantaged account. For sure, French people knew it before anybody else. And when we deep dived on Capital B, we found that out. We investigated, and it was quite a great discovery. But personally, I didn't know it. Right? Yeah.
Yeah, interesting. It seems, as a free market person, you would think that competition in these different jurisdictions would put pressure towards liberalization and deregulation of a lot of this stuff. But it doesn't sound like that's the case.
Yeah, I mean, we are all facing absolutely. So I think we enter the political side of things, and I think so. The intention was and is always that in Europe, achieving a frictionless movement of capitals and people and so on across Europe. But it's easier said than done, right? Yeah. So the results are still tough. And then also, like, I challenge you to go to start from I don't know, a country like Spain and move to Germany in a maybe city or town where nobody speaks English and find a job. Like,
right.
Good luck. Yeah.
All right. Yeah. You mentioned gold there a couple times.
Yeah.
And one of the things that's been, I don't know, kind of funny is with the Peter Schiffs of the gold side. There have been no gold treasury companies, right? I mean, this is a Bitcoin phenomenon.
Yeah.
And anyway, I wonder if you could touch on that. And also, we've seen gold have this big rally. I was a gold bug before I became a Bitcoiner, a decade ago. And I like that gold is going up. I have no ill will towards gold bugs or anything like that.
Yeah.
But they are highly correlated in this era. I mean, the forces that are pushing gold up are also pushing Bitcoin up. Is that what you see?
Yeah, definitely. That's what I see, and I would say on X there is a lot of very good content about these, and mostly I would say starting from macro and I don't know, Lynn Alden and many others, right? Like it's clear now that liquidity cycles are moving the premium, monetary premium in assets. And I was lucky enough, I did a workshop to a 1 billion European fund because they were interested suddenly in learning about Bitcoin, and I had to understand how to tell the whole story without and planting the seed. And I mainly focused on numbers and telling the whole story about macro and assets and prices and inflations and money as a tool. And among all these things, one cannot, if one needs to talk about Bitcoin, one cannot not talk about monetary expansion. And what we see over and over is that Bitcoin follows gold, but actually follows somehow Standard & Poor. They might not be correlated on a daily level. They might not have a very, very, very strong correlation because eventually they are order of magnitude differently. They have slightly different sensitivity to liquidity as well. They are different. They have different supply and availability in the sense that the price is going to be moved differently from the same amount of liquidity. But eventually, I remember doing this graph that shows very, very clearly, and I really like it. And I feel like, okay, I plotted the Standard & Poor, I plotted an ETF on semiconductors, I plotted gold, and I plotted Bitcoin, and then I plotted MSTR. And I plotted also a Mag 7, and you just see it's the same. You see the same over and over, same trajectory, same drawdown, same behavior, except that you see different volatility and different trend. So some might move more linearly, some more exponentially or following the power law. But basically, what we see is that, and this makes perfect sense, what we can observe is that in the last 30 years, the global money supply, for example, if you measure it from taking the broad money supply coming from the top central banks, you see that has been increasing at roughly 7% CAGR per year. And then you look at these and you look at how the assets move, and they moved every time. Like you look at year-over-year increase of money supply, and you see that there is a reflection in the prices of assets. And this makes sense. I mean, it makes a lot of sense. It's, I would say, common sense. If you make more money, it's going to be spent. It's going to go in the same amount of assets that there are, unless more assets are created. And it's going to make the price increase at the same rate. Now you have different assets with different supply. Bitcoin is the only scarce asset out there. Gold as well, it's scarce, but not even comparable to Bitcoin. Hence, they're going to react to that. And we have seen this over and over. And then, of course, this is made a bit dirty and noisy with timing in terms of let's say, stories that are out there that are guiding the prices, or investment behavior that are guiding the prices. I read this thing recently about George Soros, one kind of a incredible trader, and about the way he was seeing the markets, and he was talking about this phenomenon, the reflexivity, kind of. And basically, what I understood and that I really liked is that I can say in my own words, is somehow that price, like stories move price and price moves stories, and this thing keeps going on, and it's hard to identify what came first, the chicken or the egg. And I think we see these, and when we see something like some asset deviating, some asset moving differently, it's because of some things we cannot measure. But overall, what drives the trend is basically the trend of monetary asset premium. So I don't remember whom. Let me look it up. Richard Byworth said it very well. That Bitcoin is the release valve of the inflation of society. Basically, the inflation that went to increase the premium, the monetary premium in all assets, from real estate to Standard & Poor, to main indexes, to gold, and so on. Suddenly, I mean, I looked it up the numbers as well, like gold, I think around 50% of gold is traded is a monetary premium. So it's not related to industry or jewelry. Somebody could argue that even jewelry somehow is a reflection of monetary premium, because historically people used gold as a portable asset, so they would wear it. But 50%, around 50%, or maybe 40%, but a big chunk, close to half, is traded because of monetary premium. So now you have Bitcoin that is has been built for that only, to store value. So the monetary premium, to store the value, the monetary premium is gonna be sucked out of these exhausted, overpriced assets worldwide. And it's gonna drive the price up because the supply is limited. And once enough people, and every day more and more people, see it this way and understand it, like the price will reach even more astonishing levels, simply because of its features. Yeah,
Absolutely.
and it's gonna be a volatile ride. So I mean, this is not financial advice for anyone who's listening. This is my way of seeing things. I always want to point that out. I invite everybody to don't trust but verify. But that's how I see. That's how what we can read in the numbers. Yeah.
Absolutely. I wanted to jump back to your comments right near the beginning. We talked about the Treasury summer and how you've seen much faster kind of cycles. So, of course, Bitcoiners, and even, I mean, tying it into your comment that you just made there about liquidity, global liquidity, and these all sorts of different asset classes kind of moving together. The world seemed to be on a 4-year liquidity cycle as well, and that kind of pushed Bitcoin along with it. But now, since these treasury companies have come in, we had Mark Moss on a space about a week ago, and he was saying what he's seeing is more of a quarterly cycle, almost like 4 cycles within a year. So a bull market, bear market, bull market, bear market in these treasury companies. Does that check with how you're seeing things, and can you just talk about cycles in general?
Yeah. Okay. I mean, I think that's quite. It's the first time I hear it, so it's a reasonable, let's say, trial of like making sense of it, right? Saying there are shorter cycles. I see it a bit different. I don't see necessary cycles. I see a bit, as I said in the beginning, I see that there are a lot of pieces when it comes to what moves the price. There are a lot of different retail investors. There is definitely supply and demand dynamics. And when we come to with these public companies, oftentimes there are public companies with lower volumes than massive public companies. Like MSTR is one of the most traded stocks with a lot of volumes. And we look at Capital B, H100, the Smarter Web company. Smarter Web company has a lot of volumes, but for example, more volumes, but still comparable to MSTR, there is a huge difference. And Capital B and H100 have had less volumes per se. So here we start to have different dynamics. And when we have also smaller supply, and suddenly we had a pump maybe from capital that was short-term oriented, that was also maybe coming from altcoin investors, that pulls out, of course, is going to make the price drown. And I don't see it necessarily as a quarterly cycle, because clearly this money operates not in quarterly cycles, but operates with opportunity momentum. So for sure, like there is a correlation to Bitcoin. If Bitcoin doubles in value, there's going to be an impact. If Bitcoin halves in value, there's going to be an impact on these companies. And if Ethereum is pumping, and there are a lot of investors that enter and drove the price up because of euphoria, and they wanted short-term gains, and they want to seek the next shiny thing, like that is having an all-time high, like Ethereum, and they go out, then they're going to crash the price. So I see a bit as Bitcoin in the beginning, where there was a very high volatility. Whatever drives liquidity, short-term liquidity on smaller volumes asset, is going to impact the price. So I struggle to make, let's say, a statement on and say, they're going to be quarterly cycle. I think no. I think it depends a lot on how the capital moves and how much liquidity, how many short funds are actually keeping the price submerged a bit under pressure. and also how these companies are operating, because I could see like, of course they're leverage plays, so I would imagine if the price drop of bitcoins, these companies will drop. But at the same time, these companies have some companies that have operations, they all have different advantages, and if they manage to acquire a lot of capital when the price of bitcoin goes down and stuck hard, maybe the downside part will be a bit muted. So it really, I think it's hard, in my opinion, to predict short term how these companies evolve. And I think one can lose a lot of money trying to do that. That's why I think, going back to the fundamentals, once you believe Bitcoin is a scarce asset that is going to go up in price, then companies that manage to acquire Bitcoin have a healthy balance sheet, keep some sort of leverage, good enough to make them grow, but not too big that it will crush them, then these are long-term asset plays that they're gonna yield a lot in Bitcoin terms. So instead of playing the short-term trading game, which I think it can be very dangerous, because nobody saw this minus 70% drawdown coming, and I think nobody will see the next plus 4x coming. So it's hard to make prediction on price. I personally focus on fundamentals, and I'm quite relaxed about it.
Yeah, that made me think of types of investors as well. So we're seeing some large sovereign wealth funds. We're seeing some insurance funds buying into MSTR and into these ETFs. And I'm just thinking, like, that could, maybe not quarterly, but that could have an effect of like a yearly reallocation. So if they want to allocate a certain amount to Bitcoin on their balance sheet, and then Bitcoin doubles during the year, then they would have to sell some of that down to get it back into their allocation. And so you could see perhaps some yearly cycle like that. Does that make sense to you or no?
Yeah, I would say, it's a reasonable thought. We need to see how it plays out, because I guess, as an asset succeeds, more people want it. So maybe, yes, a single company that's allocated and has, I don't know how they operate, to be frank. It depends a lot on how they operate. And maybe they just, like institution, oftentimes they just buy and live there. Of course, they rebalance. If some institution rebalance, maybe there are more that allocate, then that's really a even part. Or if the price drops, then they will reallocate. So clearly there are these dynamics all over, on all companies and all assets. There are these, like, big players move the price, big players rebalance, and some hold forever. I find it hard to, like, I can imagine all this happening. I find it hard to time it. And I think anybody would find that extremely hard.
Very dynamic process. Yeah, very interesting. Okay, guys, audience members, you can request to become a speaker, and you can come up and ask anything that you would like. Try to keep it, really on topic of Bitcoin treasury companies, Bitcoin in general. That would be great. And as we're waiting for that, let's see, I probably have another question or comment here. When you talked about drivers in your Soros comment about stories driving price and price driving stories, and then there's something underlying that. And me as a macro guy, I've become very into demographics and just like an overall global growth picture.
Yeah.
And I think that can kind of that can be the beginning of that chicken or egg problem. So underlying everything is a global growth story. And now it kind of seems like we've gone through that era over the last, say, 50 years. And now we're kind of on a global degrowth story, not on purpose, but because of demographics and, too much government debt and too much public debt as well, or private debt. And So what do you think about that? I mean, I'm putting on my macro hat a little bit here, but what are your thoughts about the overall situation?
Yeah, that's a very good question and very insightful thoughts. And yes, I also think about it so much and the implication of that. I think this makes me think in my real practical life. I see still that in most countries the preferred allocation of money, earned money, and even unearned money through debt is real estate. And I do see real estate. I perceive real estate will be one of those massive pool of capital that is going to be heavily probably impacted by these. Maybe not. I'm not sure it will happen during our existence, but it's gonna like we're gonna go there because the demographic. I mean, people need a place to live. If the countries that grew faster now are slowing down in terms of newborn and birth rate, of course, the whole population of the world is slowing down. So this huge pool of capital that I see here, I have a chart in front of me, like real estate accounts for around $370 trillion of global asset value. And I see a lot of people, as I said, this is the preferred investment. And why this is the preferred investment? It's the preferred investment because it's a cultural topic, like real estate, heavy exposure and leverage above all emerged during the last century, kind of a bit of as a result of political agendas, with the idea a bit of to give everybody the chance of owning like a place to live, and policies to let's say facilitate that resulted in what we see today: 30 years mortgage rate. Like you have a mortgage for life, you paid for life, you get to own something on extreme leverage. Like you are given today the money you will earn in the next 30 years, and you take a big bet on that house that you are gonna live in. And this is, I mean, this is a kind of is like giving a kid access to interactive broker to play with options, in my opinion. And so why I see it's risky, and what's the first thing I can think about when I think about demographic is the impact on real estate. Now I know real estate has been growing fast, and like if you try to find a flat or a place to live in, I guess New York, all the capitals of the world, you are gonna struggle a lot. It feels like it has outpaced the earnings for most people, and but it's gonna slow down. And the thing is, people were like we are still in this overtone window where most people believe that real estate is the best use of the capital other than leaving it in bank. And this to me tells me two things which are very important. I think we can use them to predict what will happen next. One is people know that if you leave the capital in the bank, it's gonna lose value, so they want to do something about it. This is this is the most important piece of information, because people are following the incentive. They just didn't have a better tool than real estate, and didn't have access to information to realize that it's not a better tool. And the second piece of information is so they didn't have access to information, to understand. They didn't develop the understanding that real estate is not working. But now with, for example, recently the increase in commodity prices, like if you want to renovate a flat in Europe right now, I mean, I believe also in US, that's expensive. If your game in real estate is to allocate your money and having a depreciating asset, why depreciating? Because the costs that it causes you and the amount of work that it causes you, I'm not sure, like it doesn't really appreciate in real terms.
Right.
Then once people connect the dots, and more people connect the dots, and once the generation, most of the times, I mean, real estate, like I feel many more boomers being a fan of real estate. And also I feel like personal conversation I had recently was like from a boomer then who said, no, I don't have the time, stock market or whatever. I didn't even mention Bitcoin, but like stock market now, they don't have the time. They lived a bit, they build their career, they are in a running mode, automatic mode, they invest in real estate. But youngsters are trying to find a solution to the rent they don't manage to pay while they are asked to study 5 years at uni. Or the rent they don't manage to pay once after having studied 5 years of uni, they get paid nothing for work. So they are trying, they have the problem. And that's why a bit what Michael Saylor says, like the Microsoft will not be the one leading the adoption of Bitcoin because they don't need it. And the boomers, they don't need Bitcoin. I mean, they need it, but they don't know it, and they don't need it to the same extent that young people do. So
Right.
as demographics evolve and demand for even real estate slows down, and it will. I don't know when exactly, but we see demographic slowing down. Real estate will just keep if real estate drops the demand or slows the demand, we will see like a shifting of a huge amount of capital to what will look to people as the best place to allocate it. And I see more and more people that now use ETFs as a saving, broad index ETFs as a saving investment or tool. And more people, more and more capital is seeking Bitcoin. We see it because it's moving the price. It's just a matter of time. So yeah, I think demographic is pointing in one direction, and it's gonna break a few things here and there. And I think Bitcoin is positioned in the perfect place to capitalize on all the things will break across time due to inflation, demographics, and dynamics that we are seeing nowadays.
Absolutely. Yep. All right, let's get Rico up here. Ask your question, and remember, try to keep it onto Bitcoin Treasuries or Bitcoin more generally, but Bitcoin Treasuries specifically. So go ahead, Rico.
Yeah, thanks. Really quick, Ansel, I appreciate you doing this. I've been following you for a long time. We've had conversations back a couple cycles, but thank you. And any question to you? So I've noticed that a lot of companies that are kind of red are in a sense in the loss, the shares and stuff like that. I know it's not the Bitcoin treasuries, but I'm trying to just get a comment. And I've been in and out kind of working over here. But my comment to you is, or my question to you is, as you're starting to see institutions buy into Bitcoin, even at a loss of the shares, is there going to be like, in your prediction, a point where not only are their shares going to start retaining value, but I think at this point, the companies that are buying Bitcoin are doing it to sustain losses or in a sense become Bitcoin treasuries or, you know, I'm not sure if it comes.
You mean like zombie companies or something like that?
Yeah, exactly. You said it. That's exactly what I was trying to say. The zombie companies. There's a company that's in Paris. I'm in France, and they do semiconductors. And I forgot the name off the top of my head. It starts with an S. But a lot of companies. So yeah, I think so. A lot of companies are in the red and trying to stay relevant. At what point do you think, if we see like a pullback in the market, do we see these treasury companies either sell Bitcoin or, in a sense, gain value because they're holding their Bitcoin? Do you see what I'm saying? Like, if the market turns, totally. Are they taking a lot of, like, what's the risk there?
Yeah, absolutely. I mean, I think it's a very good question. Thank you so much for the question. So I think now we are in the Bitcoin like rush, like the run to acquire Bitcoin. And once again, there are different entities that are acquiring Bitcoins for different reasons. I'm sure there are so many companies, or there might be companies that over time see it as a way, like as a tool they use, but maybe they don't even understand. And for sure, there are people who are going to use it that way. Like, oh, we are zombie companies. We are losing earnings per shares. Nobody sees us. Oh, look what happened at these Bitcoin treasury companies. Let's do the same. Like, I mean, of course. Now, the key difference there, and this is an invite to anybody, like an investor, to always keep their eyes open and don't invest in prices, don't invest in marketing, don't invest make up your own mind. Like, it's important to invest in the fundamentals when you decide to place your money somewhere. And we have seen companies, I don't remember the names now, but we have seen companies all across the world like announcing, oh, now we buy Bitcoin. But what really counts then is the execution of how they grow their stock and what do they do with their Bitcoin. I want to make a point there, though. I think there's going to be a lot of companies buy Bitcoin that are not going to be Bitcoin stacking entities. So they're not companies with the mission to acquire Bitcoin. And we have among these, like we have Tesla, we have Figma, we have GameStop and so on. I mean, GameStop until proven wrong. But instead, these companies are very different from MSTR, from Metaplanet, Smarter Web Company, Capital B, H100. So the objective of these other companies is what we call Bitcoin Treasury companies, or we can even call Bitcoin leverage equities. These companies, they have as a mission to stack as much as Bitcoin as possible in this period, in this moment of time of history. Then probably they will evolve into something. But among these, there will be companies that will try to do that, even with the best intentions, and they will not manage because it all comes to execution. Then we'll probably have actors that will see that as an opportunity to pump the share price and capitalize on short-term increase of share price and use shareholders. And this is not new to finance. Altcoin is basically a whole industry based on that. And then we will have all these businesses that simply see Bitcoin for what it is, that is a store of value and a scarce, limited amount of money, and is an infinitely better alternative to gold and to maybe owning shares or something else to own, to cash, to own on the balance sheet of a public company, and they will do that. So yes, I think there will be. There are already, I believe. I don't remember the names, but we have seen things a bit in the industry. This is nothing new. That's why we need to keep our eyes open and point the fingers and make sure we share also in the communities and whenever we see something off, because of course we need to invest on, when we are investing on a company, we're investing on the execution of the company. If the company starts to execute bad or lose or act actually differently, the story changes and it's a different investment at the end.
Thank you, Rico, for the question.
Thank you.
And we are getting close to the hour. Do you have a couple extra minutes for us, or do you have to go?
I for sure have. Yeah, I have a little
some
more
time. Okay, great. Yeah, you mentioned your community there. Can you tell us about your Bitcoin Treasury community here on X?
Yeah, sure. Very happily. So it was, I believe, May or April, maybe May. I think May, and there were new companies popping up every day or every week, saying, "Oh, we now start to buy Bitcoin," and so on. I remember a few weeks before I discovered Capital B, I wished I discovered it a bit earlier. It was a great moment to invest.
Don't we all?
Yeah. And yeah, I remember I was chatting with Ragnar. If you know him, Ruin Ragnar is quite active on our community, and we said okay, we need a space, because before we were, I believe, all of us, or I was for sure, in a responsibly long MSTR, so that was the community, the biggest now, and we felt okay, we cannot this is not a place to talk about all these other companies. We need a place where to start to make sense of this huge mess that is going to be the wave of new companies. At the time, I don't remember how many companies we had, not so many, but I remember counting 100 and 150. Now we are at 186, I believe, using Bitcoin Treasuries net. So yeah, I opened it, and it very quickly picked up, and also all these other communities popped out, and I think it's very useful. To be frank, I think it's incredibly useful to have a place that is not necessarily biased towards one specific company, so that everybody can have a voice and share. For example, what Ragnar has been doing that he shared, I think you already saw it, is there is this Bitcoin Treasury comparison Google Sheet that is available to everyone and is reposting almost every day with the updates where you can track the most meaningful metrics across the most important treasuries. And I think this was possible only thanks to the contribution of every single individual and a place where to share.
Yeah.
Yeah,
I think that's great because the Bitcoin maximalists, there's going to be a lot of Bitcoin maximalists that don't want to hear about treasury companies. And so having a community for these people that want to talk about treasury companies, I think is extremely valuable. And you guys talk about all sorts of stuff in there. You said all sorts of different companies. Let's bring it back to Europe and the European scene of the treasury companies. Smarter Web, H100. What are the top tier European companies, and what are you thinking about, say, maybe the next 6 to 12 months for the European treasury companies?
Yeah. I would say the first three Bitcoin treasury companies, there are the Smarter Web company in UK, the Capital B in France, and H100 in Sweden.
Yeah.
And these companies are like, they all had kind of a different story and they have different nuances. We know that the prices of these companies are moving very, 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 very much together. They have different advantages, as we mentioned before, due to their location. They have different limitations. What makes them very similar is that they are all after the same mission. As Alexandre Lezé from Capital B says, they want to stack as much Bitcoin as possible, as fast as possible, in the most accretive way for shareholders as possible. So I think these companies also, so they have the same mission and they're executing incredibly fast. Some companies faster. It's interesting to see the one who started earlier is usually the slower because the others can learn from them. Like we also, when we look at MetaPlanet, like started 1 year ago and so on, and Capital B came, they started stacking faster than them. Then Smarter Web Company came and they started to stack faster than them. Then H100 came and they started to stack faster than them because they're all using the same playbook, which is Sailor playbook. And Sailor has kind of is definitely in the leading position. Is showing everybody how you can do things, and everybody can learn. And there is this wonderful, I feel it's really a community, like where everybody shares, everybody's like is supporting each other. Each company is supporting each other because after all, by doing this in this moment, they have already won. So they need to make sure they're doing it right and they're building for success and also for tough moments. And so they're very similar, and not only they're similar in the way they act and the playbook they play, but for example, in Europe, we have the same investors that like they share also some investors. For example, they all have behind UTXO management, but also Adam Beck, who is invested in H100 and Capital B. They, for example, the strategic Bitcoin fund, hedge fund, Tobam, which is the one running the ATM, like helping, let's say, running the ATM on Capital B, has also invested in the Smarter Web company. So they share the same key strategic investors. These are the biggest plays, and then I'm sure there are other companies that are like worth looking into, and there is also potentially also a lot of noise. So always let's keep our eyes open. And regarding what's coming in the next 3 to 6 months, I don't have the crystal ball, so it's really hard to say. And I think what instead I would like to do is like point out to all the pieces there are. And one of the biggest piece is these companies keep stacking. So my eyes are on how much Bitcoin they stack and how fast. and how accretively for shareholders. And all these companies are stacking accretively. And that's very important. And which means that the amount of Bitcoin per share of existing shareholder is increasing over time. So you're not getting diluted away. Is very important. Otherwise, that's the main purpose of owning a Bitcoin treasury company. Otherwise, Bitcoin is infinitely times better. And the other piece. So one piece is their execution. They keep stacking accretively. The second piece is the Bitcoin price. It's really hard now. We could have a whole other hour and more to talk about Bitcoin cycles. Are they dead? Not? Where are we going? But clearly, clearly Bitcoin, since that's what they stack and that's what is measured in their balance sheet, if Bitcoin price changes, it's going to impact their short-term price. And also we need to see if Bitcoin at some point in 2026 or later slows down, how these companies are gonna react. And in order to look like to have already to have a prediction about that, I think it's very important to look at how leveraged these companies are and what are the instruments that are using. And I think it's very important. That's what Sailors is doing as well, right? Like he survived the last bear market, had a lot of learnings, and that's why now he came out with the preferred. Is using the prefers and values them more than convertible debt. But there are interesting innovations like in Europe that we have, for example, H100 and Capital B. Capital B first, they introduced for the first time, they use a new financial tool, which is Bitcoin denominated convertible debt. And this was clearly an innovation that also protects the company from the worst case scenario. And also by protecting the company from the worst case scenario, keeps the credit rating higher, which means they can then borrow at better conditions in order to buy more Bitcoin. So these are all moving pieces on which we should keep our eyes on, and they all can play a different part. But so far, these companies have been proving that even if the price of their shares dropped like 70%, they could keep stuck in Bitcoin, which is a very good signal so far.
Yeah, it's amazing. Every day you heard more people stacking, and like you were saying, there was a big drawdown this summer, but everyone kept stacking, and so that does minimize the volatility to the downside, as we can obviously tell by looking at the Bitcoin chart. So very, very interesting stuff. Do you have anything here that you would like to plug at the end, Enya?
No, I mean, I think I need to thank you, Ansel, for this space and for inviting me, and also for sharing the word about Bitcoin and Bitcoin treasuries. I think it's very important. It's a very important job. Nobody is paying us, but spreading the word is as important as executing. For example, in these Bitcoin treasuries, it's a way to care for the others, and I love doing that.
Well, thank you very much for coming on the show. Yeah, I feel like Bitcoin, it's a hedge against a lot of the social unrest that we're seeing out there in the world as well. So uncertainty, not just on the economic side, but even the political side. Bitcoin is that lifeboat, and it's just such an obvious answer for individuals and companies that want to perhaps add some hedging to this systemic risk out there. I wanted to tell the audience, we got some great guests lined up. So tomorrow we're going to have Ed Money come back on the show, and he's going to debrief his experience there at NYC at the conference going on. Also on Monday, we're going to have Grain of Salt come on and give us his expertise. And then on Tuesday, super excited, Kenny from West Main Storage, that small company, the storage company that is stacking little bits of Bitcoin and has adopted the Bitcoin reserve or treasury as part of their small business. So that's going to be a really exciting one on Tuesday next week. But I want to thank everybody for coming. Check out bitcointreasuries.net for all of the info that we have there. It's a free account, and you get access to everything. Also, we do have that masterclass coming up September 30th. Check out bitcointreasurycourse.com and use the code Bitcoin Treasuries to get 15% off. All right, guys. Thank you very much. Thank you, Enya, and we will see you guys tomorrow.